First of all, welcome everybody. Thank you for hopping on with me again. This is our second time in 2 weeks, and wow, so much has happened in 2 weeks. Just as a reminder, if you can use the Q&A for your questions as opposed to the chat. I can retain that. I didn't successfully do that last time, so luckily Sarah was behind the scenes writing down the questions. But the Q&As, those automatically save from this Zoom meeting. So if you've never used Zoom before and you are thinking that you need to start doing that for some team meetings and things that you're now doing remotely because you're not in the office, I really love this application. We've actually been using it for a long time, but even the webinar features inside of it are super easy to do. But even just the meeting pieces are very easy as well. So if you're ever looking for some sort of an application for remote meetings or teaching classes or whatever online, I do recommend Zoom. And I'm not affiliated. I don't get anything from them. Okay, so we're here for steering your business through COVID-19 Part 2. So here we are. We're still in it. We're still sheltering in place or staying, following the stay-at-home order. I think I've been out about once in the last week. We did have to get some groceries, but I have been walking my neighborhood with Zodiac. If you guys know Zodiac, who comes to the office, he is missing the office, and I don't know that he's missing the office so much as getting in the car every day. He walks to the back of the car thinking he's going to get to go for a ride today, and he has not been in the car, and so he's kind of upset about that. But we do walk him quite a bit more. We're out in the neighborhood now that it's getting nice out, and but I miss, you know, just being out and about, and I'm sure you guys do too. So all right, so welcome. We have a lot to cover today. There is obviously, since last week when they passed the CARES Act, there has been just information rolling in. It's actually amazing how quickly things can work in a crisis, as opposed to when, you know, we're not in a crisis and it feels like every single bill and act and provision that comes out from the government takes forever. So today we are going to cover some updates on the economic impact payments. We're going to be covering some updates on the FFCRA, which is the sick leave and the expanded medical leave updates. And then the biggie, this is the question of the day of the week, is the payroll protection program loans. And I'll just tell you that my team and I have been, it feels like working nonstop trying to get all the information on this. And it is changing hourly, it feels like. And even today, when it was supposed to be rolled out, there are still changes coming. So, so bear with us as we are working through these details. I'll say what I said last week. Nobody can tell you they know all the ins and outs of what's going on in any of these situations right now. So we are all learning on the fly, and hopefully using some really good resources so that we're all getting the right good information. We're also going to talk about some the additional SBA disaster relief loan guidance. Not a whole lot on this because the payroll protection program is going to take the bulk of our time, I'm guessing. And then we're going to talk a little bit about focusing on the future and Q2. We're in it, and we need to think about what happens in this quarter and moving forward, and how to kind of keep your business on track or get it back on track, and looking forward. So those are the topics we are going to cover. And if you have questions, again, put them in the Q&A or put them in the chat. I don't know that I have anybody monitoring those for me right now. So we will pause between some topics and just look at those questions, and I'll try to get as many answered as possible. I plan on, I will go live again next Wednesday to do all follow-up questions and any updates we've received from the various sources that happens over the weekend. I probably will not get to go live for questions until at least Wednesday, but I will plan on doing that as well. So I'm gonna just look at the Q&A real quick. See if there's anything I can Let's see. All right, so I answered that one. If you Okay, all right, so I see those questions and I will try to address them as we get to each topic. All right, so let's hop on in. We're going to talk first about the economic stimulus payments. They are actually, I think they're the economic impact payments is what this slide should say, and they are otherwise known as those individual stimulus checks. So guidance has come out on what is going to be happening with those. The dollar amounts are still the same, $1,200 per person, $500 per dependent under 17, or 17 and under, I should say. And that is their age at the time of filing of the return. And so what I will tell you is if they're basing it on your 2018 return, I'm guessing it's going to be that age. And if it's a 2019 return, it will be that age. So if your kid went from 17 to 18 from 2018 to 2019, it's going to be a little unclear on if you get that money. If you get the money, you're never going to have to give it back. So just know they will have some accounting for that on your 2020 return, but you are not going to actually, it's going to be an accounting of it, but it's not going to be anything where you have to pay it back. It is not anything that it's not a rebate. It's not a prepayment of some sort. It is just money that's going into your pocket. It's not taxable, and you don't have to pay it back. So if for some reason they miscalculated how many dependents, because you're going to get the money. Limits are still the same. Adjusted gross income of $75,000 for a single individual, and that is phased out when income gets over $99,000. Married is just double of that. And you're looking at adjusted gross income on 2018. If 2019 isn't filed, you will be looking at 2019 if 2019 has been filed already. So the immediate update was that this week they had said that there's going to be a short form for those people who are didn't have a filing requirement. And they said initially it said it was going to include those people who had Social Security, and that's what they didn't have a filing requirement. They have backed off on that and said that if you are receiving Social Security, those payments will come to you via whatever method you're receiving your Social Security payments. So if you get them via check, a check will be mailed, and if you get direct deposit, it will go to that account. You don't have to do the short form. The short form is going to be for those people who didn't have a filing requirement, low income, no Social Security received. And so what will happen with those is they're developing the short form. It is not a 1040 EZ. Those were eliminated actually with 2019. So don't think that that's how you're going to get that filed. They're developing that form. And essentially that's what that's going to do is allow those people who don't have a filing requirement, they don't need to go back and put in a 2018 or 2019 return and try to force it into some sort of a refund so that they can put a direct deposit account in. This is essentially going to allow them to essentially give their pertinent information, their dependent information, and their direct deposit information. In addition, the IRS is planning to open up a portal where you will be able to put in your direct deposit information. If you did not have a refund on your return, returns that are e-filed do not actually submit any account information to the IRS. Only if you have a refund is it submitted. So even if you have given us an account in the past and this year you owed, those account information is not going to go to the IRS. So they're going to open up a portal. Don't know how long that's going to take. I have not heard of an estimated date yet. And they will be allowing you to log in and put in your direct deposit information. In the meantime, I did hear this morning that they announced that the checks and the payments will be coming out about a week sooner than they had expected. I think last week they said about 3 weeks. Now they're saying, we think it'll be about 2 weeks. So that would kind of indicate that you would be starting to see those payments going out by next week. Maybe towards the end of the week. That would be a full 2 weeks since the plan was passed. But again, we're still in that a little bit of the unknown. I've had questions during the week regarding, okay, can I get my return filed even though I don't have all my information yet? Can you go ahead and file for me and we amend it later so that I can take advantage of a dependent that was born last year or take advantage of a AGI limit? And from my standpoint, the answer is no. If we know the information is incomplete, we cannot file a return. We have guidelines that we're required to file or to follow regarding the information that on the return being accurate. And if we leave information off that substantially changes the return, we can be penalized. And so the policy in my firm is that, unless we think we have all the information, we are not going to file a return, and we're also not going to hurry up a return. We want it to go out accurately. We don't want to have to do amendments later. So I recommend with anybody who's preparing your returns, just be patient with them. This is a crazy time, and even though we have that extension till July 15th, there's going to be people who really want their returns ready. So either because they're getting a refund or because they want to use the income information for 2019 versus 2018 for these stimulus checks. Still no indication here on the timing of when a 2019 return would be the one that is being used. So just know we're still waiting for information to come in on all of those things. So a question has come in from Beth. If someone is over 18 and in college, will they get it? Not if they didn't file a return, and if they are still a dependent of someone else, no. So there is a gap here between people who are 17 years old and their parents are getting $500 for them, and people who are over 17, still a dependent, they're not sending money for those people. So unless they file their own return and their status on the return was single, as opposed to, and not a dependent of someone else. So I believe those people who, that keeps them from double dipping. So when your 16-year-old gets a job, they file to get their federal withholding back, but they're still a dependent of mom and dad. They shouldn't get a $500 or a $1,200 check and mom and dad get the $500. So there's a gap for the college age students that are still dependents. I do not believe those are, they're just not going to be accounted for as far as this money. Okay, so I have listed here the link to the economic impact payments and what you need to know. They are updating that regularly. So I am guessing if you are following irs.gov on any of this, actually any of the websites, they're being updated so quickly. I am checking them daily, sometimes multiple times a day, and I've kind of had to try to back off from that so that I'm not constantly just doing research and I'm actually getting some work done too. But I have all of these links. I have also included on the last slide, and the slide deck will get emailed like it did last week. So you will have all those links, but the IRS is doing a great job of updating the information. So irs.gov, and there is a very top thing is a button that says Corona Relief, and go there and all of the things are there. So, okay, so let's see what we have next. All right, so we're going to talk a little bit about the more information now that the FFCRA, paid sick leave and expanded family medical leave has went into effect. So it went into effect on Wednesday. So that is for anybody who falls into the categories of is quarantined or self-quarantined by doctor's order, has the virus, or is just quarantined waiting to find it out. It affects the people who are taking care of someone who is quarantined, and it also affects people who have been impacted by the schools closing and are needing to stay home with children because either their school daycare is closed or their whoever their regular person is unavailable because of the virus. So, excuse me. With that being said, now that it's in effect, it's not retroactive for any time that was prior to April 1st. So if you have people this week who are actually taking advantage of this sick leave because they're quarantined, you will need to start paying them accordingly and keeping track of that. This applies to employers with 50 or fewer employees, and you're required to follow it unless there are some exemptions for healthcare providers where they are exempt. And there's also, if you feel that paying the sick leave is going to affect your ability to stay in business, there are some guidelines for essentially appealing the situation so that you say you don't have to. Now that we're here, we're looking at, okay, what kind of documentation needs to be kept by the employer or to support the fact that they're going to take a payroll tax credit for this, these costs. So what the way this works is that you're going to be required to pay the sick leave or the family medical leave at whatever rates are dictated, and you will be able to take a credit off of your payroll taxes that you pay to the federal government for. You pay it, usually people mostly pay it at the time they file their, do their payroll, or at the end of the quarter, or weekly or monthly. There's, there's different filing frequencies. So what I have read so far has said, you want to make sure that you're getting some sort of doctor's order that is stating that the person is required to be quarantined from a medical doctor, a nurse practitioner, or the equivalent. And then as far as support for a school being closed, an employee can provide you a news story, a letter or email from the school district stating that they're closed and what their expected open date will be, those types of things. So there is going to be some requirements here, and I'm guessing that it will be okay for these people to email these to you. They don't have to bring you a physical document, because obviously if they're ill, you don't want them in your place of employment. But you do want to start thinking about those things. Situations that have been asked about are, okay, if they don't fall into one of those categories, they're not required to be quarantined, they're not ill, they're not taking care of someone who's quarantined, and they're not staying home with kids who are off of school or don't have a child care provider. Do you have to pay them if they're choosing to stay home as a safety precaution for themselves and their family? No. If the work is there, then and they have a way, they can come in and work and you're not excluded and your place of business isn't closed and all of those things, then you don't have to pay them if they're making that choice. They could use other accumulated vacation or paid time off leave that if your business provides that, but you are not required to pay them any of the sick leave and expanded family medical leave from this particular act. The list of questions relating to this has expanded exponentially in the last week. So I think I was looking at a list of about 19 questions, and it was getting close to 60 questions last night. So there's lots of questions and answers out there now for like, it feels like every scenario possible. So excuse me, definitely take advantage of this resource that is listed here at the Department of Labor, because that is where you will be able to kind of track down your specific situation. A lot of what it indicates is that the employer is going to have some control over different situations. So if you have an employee that comes to you and says, I need to stay home with my kid, and I want to alternate that. My spouse can stay home with them on Tuesdays and Thursdays. I'll stay home Monday, Wednesdays, and Fridays. Is that doable? Yes. So that is, you would only be paying, so what would happen there is you would pay them for the sick leave at 2/3 of their pay up to the limit. And then on the days they're actually working, they would get their regular pay. So what's really going to happen inside this is that us as payroll preparers, and anybody who's using a payroll preparer, or if you're preparing your own payroll, you will want to make sure that you are creating a payroll item to specifically keep track of the paid sick leave that's related to COVID-19 and the expanded family medical leave that is specific to COVID-19. Because those are two payroll items that us as payroll preparers are going to need to know, so we know how to calculate the correct amount of payroll taxes and what credits you are entitled to. And if we don't start keeping track of that from day one, it's going to be a big old mess. So know that though employers can essentially look at this and say, okay, let's do what's best for that family, but also keep them working as much as they can. So if it's taking care of a staying home for childcare, then you can do that by the hour, you know. So if somebody says, I can work for you, I'm a full-time person, I typically work 8 hours a day, I can work for you in the mornings remotely, and then in the afternoons, I'm gonna take the sick leave or the family medical leave. So you could do that, and they could do it by the hour. And that's why it's super important to have those payroll items set up so that you can be tracking that on either the timesheets or however your payroll gets done, you're reporting it accurately. If someone is staying home with a quarantined person and or sick themselves, those you couldn't really do by the hour. They are saying the guidance is that that's by the day. You don't want somebody who's, obviously you don't want somebody who's sick coming in at all. And so you don't want to say, I was sick in the morning and now I'm better and now I can work. So they're really looking at those situations definitely for the care providers to the kids. But there's guidance out there as well on what to do with the situations of if someone is ill, you can't pay them by the hour on those. So the good news was, I thought that you have some leeway as an employer to be able to come to an agreement, because yes, you are required to pay these things for paid sick leave if they're in quarantine, mandated quarantine by a doctor or ill, or taking care of somebody who's quarantined. That is 2 weeks. And so for a full-time person, that's 80 hours of pay. And for a part-time person, it is the number of hours of their average 2 weeks. So if they average 25 hours a week, they're going to get paid 50 hours of sick leave. That's the same for but they get 50 hours at 2/3 pay for those people who are taken care of. The only people that get 100% pay are the ones who are actually sick. Any caregivers are at 2/3 pay, and there are limits, so they can't exceed a certain amount of pay per day. So there's, like I said, tons of guidance. This list of questions is expanding exponentially on and on and on, it feels like. So great, it's a great resource though. I mean, if you're looking for a specific situation from an employee or an employer standpoint, they're addressing both issues. Yes, it applies to part-time employees. The paid sick leave and the first 2 weeks of the caring for a child who's out of school, it applies to a part-time employee. The extension of the family medical leave, the expanded portion of it, is an additional 10 weeks. And that you're only required to continue to pay 2/3 pay for your part-time people if they've been there at least, or for anybody, if they've been working for your company for at least 30 days. And that is 30 calendar days. It's not 30 days in sequence. It's not 30, it's 30 calendar days. So if they started on March 1st, then they're eligible right now. So for that extension, it's only 30 days. It doesn't have anything to do with the prior FMLA rules. This is an exception in extraneous circumstances. So yes, part-time people affected, they get the 2 weeks. If they need the extra 10 weeks, they have to have been there 30 days. Yeah, so the question here is relating to, it's from Mel. She's saying, so we take the credit off of our payroll taxes. And so the answer really is yes. There is a lot of misinformation and a lot of third parties who are taking a stand saying, you know, if you don't pay your payroll taxes in full as a payroll processor, we're not paying your taxes for you. We won't pay anything less than the full amount. The rule states that you are able, the only way to make this work so a small business gets any benefit from it is that there's no out of pocket to the small business. So the rule really is, if you're paying your taxes every week and you have somebody affected by this, then you would be able to subtract that amount off of the 941 payment you make for that payroll. One, that's why it's really important to have separate items set up. And two, that's why you really need to make sure you understand the guidance if you're the one paying the payroll taxes. And then what happens is all of that will get trued up on the 941 form that is essentially due at the end of second quarter, which is due in July. So it's giving them plenty of time to revise this 941 form, because the 941 form is going to be revised for multiple pieces of this legislation, including this one. But the original discussion is that you pay the person for the sick leave or the FMLA, you deduct it off your 941 taxes. So it nets to no issues for you except for the state unemployment. Any of the employer pieces of the expense you're still on the hook for, but at least for the majority of it, you're managing to get some relief in having to pay someone who's not there, since it is mandated. So Gary's asking, if an employee is collecting unemployment, can they have this coming? So if somebody's collecting unemployment, then they're not working for you anymore, and you are not required to pay them this. They cannot be getting sick leave and unemployment at the same time. Sick leave is a wage, it's a pay. And so that implies that they are still working for you. So there's no double dipping. You can have sick leave, and then if you laid them off and they didn't have a job anymore, then they would be entitled to unemployment, but no benefits. So there's so that's the piece of this that they're trying to help with, is the fact that all these people who are filing unemployment are losing their benefits. So there's small businesses under 25 employees are not required to follow COBRA. They do not have to continue health insurance or any benefits for employees that have left. So there's going to be a mass amount of people who don't have medical insurance with all of these layoffs that are happening. Okay, so question here is, what if an employee already works from home and now they're having to take some of their time during their day to homeschool their kids? My initial thought was, okay, if they're still getting in their 40 hours in the week that you're needing them to work, or if you require them 8 hours a day, whatever your requirements of them are, I would say I wouldn't worry about it. If they are ending up having to work fewer hours because of the fact that they are having to do the homeschooling with the kids and they can't also keep up with their workload, then you may be looking at paying them the paid sick leave for the first 2 weeks, and then just for those hours though, so until they use up their 80 hours if they're full-time. After that, and again, that's at 2/3 pay if it's for taking care of kids while their caregivers are not available. And then they could go ahead and get 2/3 pay for the rest of those hours. Keeping track of that would be I would expect the employer would want to make sure that they are tracking the hours that they are working versus the hours they are schooling. And we would treat that essentially as the paid sick leave COVID-19 hours, so that we have those for payroll purposes. Let's see, we've got a question here. If the qualified wages are greater than the taxes due, do employers get a refund? Yes. So what's going to happen is, if your wages, the wages that you're paying in sick leave exceed the amount of taxes, that will all get trued up on that 941 that gets filed in July. And again, these are things rules are going through December 2020. So this could affect both, it'll affect second quarter, third quarter, and potentially fourth quarter. God forbid. I'm hoping we're looking at no more than it affecting second quarter, but they have definitely are planning second and third quarter. And these rules are stating, this is effective through December 31st. So it is going to be available on all of those 941 forms. So yes, this is going to be something that they're hoping that the small businesses are not going to take a big hit on. Okay, let's see if we've got any other questions relating to this one. Okay, no, so I think, so that covers that, that topic. Like I said, this one is in place right now. So if you have any employees that are affected by this right now, you need to get with your payroll provider to make sure that you're tracking the hours accurately, so that when payrolls are run, we or whoever you're using is creating a system for making sure that you are going to get credit for that. If you were to not take anything off of your 941 taxes at the time of payroll, there will be a way to true that up and get a refund at the time you file the 941 in second quarter. So, so if there is a payroll provider out there that is kind of balking at the fact that they don't want to be responsible for short paying your taxes, is what it is. If they're balking at that, know that when it gets trued up at the end, as long as you're keeping track of it the right way and the right pay rates are being used and all of those things, then you should be able to go ahead and get those refunds when you file your 941 in July. This is going to be something that you really kind of need to stay on top of if you want any benefit from, if you are not the payroll preparer. We're in a position, it's all new to us, but we know that we are, are going to be handling it accurately, and we do all payroll through QuickBooks. So we are going to figure this out so that our clients are getting the benefit from it. And I would hope that all of the payroll companies are, but I have heard some various answers essentially that, they're kind of saying, I don't know, we don't know if we have enough guidance, therefore we're not going to comply. And that's really defeats the purpose of the whole thing, in my opinion. So just know that it's my opinion. Okay, so we're going to move on to the big one for the day. So this is going to be, like I said, question of the day, question of the week. We have been working just furiously trying to get answers to these questions and figuring out how to get the applications filled out accurately with the right request for the loan. So the Payroll Protection Program, essentially it was supposed to start today as for businesses with employees. The original information that came out said that if you're self-employed where you don't have any employees, that applications would be starting on or around April 10th. I will tell you right now, this area is extremely crazy right now. So the banks are trying to get information. They're trying to get their people educated. The Treasury Department is putting regulations out that are, there was a new regulation that came out sometime overnight that the banks are now trying to comply with, including a new application form. So if they sent one to you earlier this week, it has been superseded by one that came out today. So just know that this is an area that is, there's lots of media around it. The reasons behind it make sense, but there is definitely some learning curve across the board, from businesses to people helping with the applications to the banks. There's just not a whole lot of 100% this is how you do it out there. And so us as a very small firm, we don't have the big CPA firms have a research department. They have people that they can just say, hey, stop doing tax returns, go do this research. And whereas a little firm that handles a lot of day-to-day accounting, bookkeeping, payroll needs, as well as tax work, we're having to kind of pick and choose what we are getting done right now. And so our individual tax returns with the extension have kind of they've been slowed. We're not getting as many out right now. We've got a lot waiting for me to look at, but I've been making this a priority. So who can apply? So businesses that have employees and also self-employed persons. The original guidance says that the business must be impacted by the pandemic. What that really boils down to is that everybody is going to be impacted in some way, some much more quickly and much more severely than others. I do not know if banks are going to be prioritizing loans in any way, except on a first come, first served basis. And so if your impact has not been as severe as someone else's, but you get your application in first, maybe you're going to get your money before them. And I'll tell you, for most of you, and a lot of you are my clients, we are prioritizing the clients that have been directly impacted, as in had to shut their door because they're retail or restaurant related, and have already laid people off. So we are starting with those, and thankfully that is a small percentage of our client base. But if those people will be hearing from us today. And after that, we are prioritizing, as if you've contacted us, we're working on it. If after this program, when you hear all the things on how to calculate it and you're like, I can do this myself, and we just need to send you some copies of some 941 forms, we can take care of that for you, and we should be able to take care of that for you today. And you're going to fill out that form and you're going to do your own calculation. Just let us know, because we will be looking at every client as quickly as we possibly can, because everybody's going to be impacted. So what does this loan do? It's going to provide loans to small businesses, essentially, to keep everybody employed. And you have to have fewer than 500 employees. And it will be essentially a loan that is capped at 2.5%, 2.5 times your payroll costs. The other cap is $10 million, so whichever's less. And I believe most people, it will be capped at 2.5 times their payroll costs. Portion of this is being offered for forgiveness, as long as your employee levels are maintained during the course of the loan. And that means you may need to rehire. If you laid off people, they're going to be comparing how many people you had for second quarter or April, May, and June of last year to what you ended up having this year. So just know that if you had to lay a bunch of people off, you're going to have to get the forgiveness, not to get the loan, to get the forgiveness, you will have to rehire and maintain those levels. You'll also have to not cut payroll costs more than 25% on somebody or anybody, really. And then it's also, the forgiveness is available on payroll costs and rent and utilities paid in the first 8 weeks. The caveat on that is that any expenses other than payroll related, which is health insurance and retirement accounts and the actual payroll wages, can't exceed 25% of the forgiven amount. So essentially, they want the bulk of this to be spent on payroll, bringing people back, keeping them paid. And so they've kind of put a proration on that, where you can't suddenly just prepay your rent and get a whole bunch forgiven. So just so you know, there's also some other pieces in there that are part of the 8 weeks. Your lender is going to want to confirm all that information with you at that 8-week point to figure out how much is going to be forgiven. The remainder of the loan is going to be due over 2 years, not 10, which was how it came out initially, and at 1% interest, which was updated just this morning from 0.5% interest. So what's still a good deal. And then the payments won't begin for 6 months after the loan is funded. So if you get funding next week, you'll have 6 months before you have to make a payment. And then there's also no prepayment penalties for getting it all paid off early, although you're kind of down to 18 months when it's all said and done. So it's not a very long-term loan to begin with. All right, so Treasury regulations that came out today were very specific, that said it is first come, first served. So there is it's like the gold rush and people trying to get their applications to the bank. The problem with that is the guidance that has gone to the bank is still changing. And so, like I said, the application itself, there's a new one out. So if you got one more than 24 hours ago and started filling it out, you have a new one that you need to complete instead. And you will know, because at the very top of the form, and I don't know if I have it here, at the top of the form, it has a box that has all kinds of choices, including S Corp, C Corp, single member LLC, not-for-profit. It has all the choices. The original form didn't have it. If you were a C Corp or an S Corp, there was no box to check. There was like 4 boxes. Now there's like all the choices of entity up at the top. So that application has changed. The other thing is if your application says in one of the boxes, number of jobs, meaning number of employees, that number of jobs form, that's outdated. It now says number of employees because jobs is a little vague when it comes to reporting how many employees you have. So just know, new form. If you started one before this morning, you are looking at needing to put it in. It needs to be on the new form. Not much else has changed. It's still pretty much the same information. What's happening in the banking situation with this, you have to go through a participating bank or credit union. Some banks are opting out. They're like, not enough guidance. I don't even want to be a part of it. Some are only going to offer these to existing clients. Most of the requirements when you get a loan from any bank is that you have an account with them. And because of the nature of this one and it's only being offered through June 30th, people are saying, you know, if you're not already a client, I may not be interested in trying to get this done for you right now. And then other banks we have seen, they're just putting a hold on the process. They're waiting for further guidance because it is fluctuating. Like I said, felt like every hour changes were being made. So the form that you need to fill out now is a 2483. The newest version is available on the Treasury website or the SBA website. Make sure that you have that most recent form because you don't want your application to be kicked out because you're using a form that was outdated by a couple days. It's not like it was even last year's form or last month's form. Well, might have been last month's form since we did cross a month this week. Documentation that is most likely going to be required is going to be 2019 payroll information is the easiest way to get the calculation done. There are other opportunities, and today's change was that you could look at payroll wages from March through June of 2019 and do the monthly average based on that. That came out today and I did not further research on why, except that that's the same window they'll be looking at to see if you comply with the maintaining your payroll census when they're looking for the forgiveness. But that's just a guess, I did not research it. So W-3s, W-2s for 2019, 941 forms, 940 form, your health insurance paid by the employer. So you will have to figure out how much the employer paid and not even if you paid the entire bill, if you withheld some from paychecks for your employees had to fund some of it, then they want just the amount that the employer paid, amount paid for retirement contributions, and amount paid for state and local taxes paid. State and local taxes paid associated with payroll only. So if you have to pay other types of local taxes or state taxes, they're not allowing you to include your personal property tax or real estate taxes or anything like that. It's just state and local taxes associated with the employer's portion of payroll. Self-employed persons will have documentation also required that is going to look more like your 1099 miscellaneouses that you might have received that support your income, a Schedule C that you filed with your individual tax return, financial records, bank statements supporting income coming in, those types of things. It's not going to be as easy because you don't have the same payroll forms to use as your as the guide and the support for all of this. So, okay, I'm going to look at questions real quick before we move into this next section. Okay. So the answer is there is no guidance on the number of employees to fill in the application. It asks for number of employees. I suggest that you include the number of employees on your payroll census the day you file the application. As opposed to, last year. There's no guidance, but you need to include them all, including the part-time people. Let's see. All right, and then, yeah, so we'll move into this, this next one. All right, the calculation. You know, we frantically worked on it yesterday morning to find out that they've changed the guidance. So then we've been frantically working on it this morning to come up with what documents we need to actually prepare this calculation accurately so everybody's getting the correct amount. They're not asking for too much, they're not asking for too little. We want to get it as close as possible. We want you to get as much as you're entitled to, but we don't want you to get more than you're entitled to, because then that, you know, takes away from other people getting the loans. Supposedly they used some math to figure out how much to fund this program with. It's like $329 million or whatever, was based on number of small businesses in America, how many actually are like businesses that actually operate, because there's a lot of companies that are just holding companies and whatnot. So they did some math on this, that even, you know, there should be enough money for everybody. It is being absolutely sold as the money's going to be gone today. I don't have any control over that. The application window is open through June 30th. Some banks haven't even contacted their customers yet. Talk about my bank. And I'm not faulting them for that at all, because as of this morning, the banks that did contact their customers and say, get started, had to then say, oh, by the way, you got to do this all again. We got to change all this, put this on a form, don't include this, do include this. And so I'm, you know, I don't know what to do. So here we're going to talk about the actual calculation of payroll costs. So payroll costs are not just wages. It is the directions we have found and have been confirmed by more than one source is that the wages that you included in box 5 of your 2019 W-2, W-3. So your W-3 is essentially the compilation of all of the W-2s behind it. So you start with the number that's actually in box 5 of, I think I put W-2 here, but it should be W-3. Start with that number. You're going to subtract any wages over $100,000 on any employee. So if you have somebody who makes $125,000, you only get to count $100,000 of their payroll. And that's for anybody over $100,000. You're then going to include the employer's portion of health insurance costs paid during 2019. You don't get to include anything that was deducted from the employee's paycheck. You only get to include the employer's portion for all of 2019, not just last month, not just December. You need to, so what we're doing is accumulating a total number for an entire year so that we can then get the average for the month by dividing by 12. So you're looking at the whole month. Just looking here, see if somebody's trying to get a hold of me. No. Okay. And same with your retirement contributions. You're looking at the portion that the employer paid in matching or profit sharing or any of those pieces that went into an individual's retirement account, and nothing that was deducted to fund their own retirement from their own paycheck. And that again is for all of 2019. So a lot of that matching is a payroll item that we can pull out of your payroll records very easily. So let's see what I got going here. Okay. Back up. There we go. Okay. The number 5 is the portion of state and local taxes related to payroll. That is your state unemployment. If you have a 0 rate, hallelujah, you don't have anything there. And your city P10 for St. Louis. So if you're in St. Louis and you are a city employer, you are paying in some P10 taxes, which is 0.5% of your city wages. Those for 2019 will get included in this calculation. You're not including the W-10 and you're not including the state withholding because those are pieces that are just pass-throughs to you. You're withholding from the paycheck and then you're paying those in on the employee's behalf. Then you're going to take this total and you're going to divide it by 12 to come up with your average monthly payroll costs. And then you're going to multiply that by 2.5 to get the amount of funds that you're requesting. Okay, so again, you're looking for totals for 2019, not just a month, not, you need 12 months worth of this data. So not, because then you're going to take it and divide it to get to the average. All right, so you know me, I'm an accountant. I give you an example. So if we took all of the wages that were reported in box 5 of the W-2s, which would also be accumulated on your W-3 in the same box, box 5, and it's 500,000. We then are looking at each individual W-2, and if there's one that's over 100,000, we are saying, okay, we need to subtract off the amount over 100. So in this example, we had one person who was making 125,000. So off of our wages number, we are taking 25,000. So then we went through and we figured out, okay, so we paid in this amount to health insurance. From that, the employees paid in this much. Here's our net. How we're getting that is actually could vary by company, but for most of us, you should be able to, if you have a health insurance line on your profit and loss, you should be able to take that if what is posted in there is the bills that you paid in total. So if you owed Anthem $10,000, 12 months, that's all in there. And the offset, any payroll items that offset that from the employee wages would subtract from that. So if you pay 50% and you pay $10,000 a month, there should be about $60,000 in there for health insurance. What we're seeing with some clients is they're using their insurance line for health insurance, general liability insurance, life insurance. They've got multiple things in there. So we are going through and having to fine tune that a little bit more so that you're just pulling your health insurance. If you pay health insurance 100% for your clients, then that should be fairly easy. You're going to go to the vendors that you pay for health, dental, and vision for, and you are going to see how much you paid to them last year, and that's the number you're going to put on that line. The biggest piece of this is to make sure that you are not including on this line the amounts that were subtracted from your employees' checks. So if they have to pay for any portion of it, you need to make sure that that is not included in this number. All right, so in my case, I've picked $45,000 as the amount of health insurance. Employer matching is, that is for, I'm assuming this company has a simple IRA, and they matched $10,000 into that account in 2019. Then we have state and local taxes that were paid on payroll in 2019, that totaled $4,000, giving us total payroll costs that are eligible for the payroll protection loan of $534,000. You take that total, you divide it by 12, and you multiply it by 2.5. And so then on your loan application, you are going to list the average monthly payroll costs, the $44,500, and then you're going to, it tells you to multiply it by 2.5, and you're also going to put in the 111,250. And then the next box over from that is the number of employees, and my suggestion is that you use your current census. However many people you paid on your most recent payroll, that's who's employed right now. I will say, I don't really know the answer if that's really what they're going to do. So this is a huge, this is a huge number everybody's trying to come up with today. We, behind the scenes, are putting together the payroll loan package, the payroll protection loan package of copies of your W-3 and W-2s, copies of 4 quarters of 941s, copy of your 940, whatever backup we used out of your QuickBooks file to come up with your health insurance employer portion. Everybody says, well, should I just include my health insurance bills? Well, only if you paid 100%. Otherwise, you're still going to have to show them how you came up with the employer portion, because you don't get, if the employees paid any of it, you don't get 100% of those bills. We're also including from the QuickBooks payroll reports how much the matching to any retirement accounts are and the state and local taxes. So we're including all of that in a package and the calculation of this number so that you can just take those numbers and drop them onto your application. Again, we're working as quickly as we can. I got one out this morning to a customer that is, just grossly affected by this. We've got, like I said, we have about 4 or 5 that we're just like, they need these today. And I know y'all need them today, but the ones who have had to shut their doors and lay off people are the ones that we're addressing as quickly as we can. If you're still bringing revenues in the door, then, and you're still haven't had to lay anybody off yet, yes, I feel you will be impacted, but we had to pick a prioritization line, and so I picked it there. Okay, I'm going to go back through my questions real quick because some of these questions at the beginning were asking about this specific topic. Okay, so the question is, how is paid leave and paycheck protection handled? Those are 2 separate things happening. You're required to do the paid leave. You're not required to get a payroll protection loan. So I'm not really totally sure I understand that. The proceeds from this loan cannot be used to pay payroll or cannot be used to pay any taxes. And you cannot include in these numbers as you're doing the calculation any payroll taxes paid. You're starting with a gross number, so there should be no, you're not also including the company's share of FICA or anything like that in this calculation. You're just starting with this gross wage number. So in the healthcare costs, what is included? I'm just guessing here, but if you paid it out of the company, and that would be if you paid vision, dental, health insurance, if you paid some sort of Medicare supplement for in some fashion, those types of things, prescription supplements, any type of insurance, I would say if it was paid in 2019, you're including that. So if you make more than 100,000, okay, so if you make more than 100,000, everything's limited to 100,000. What I didn't show on here, but which is something that we need to be including, is owners that are in a partnership or a single member LLC that have payroll. We will be including a line for the owner's income. Whether it's a calculation of the draws or self-employment income, that is still very fuzzy, but we're going to include something because those people are getting paid out of that company. They're just not legally allowed to get a W-2. So, but it's still capped at 100,000. So if you took, 150,000 out of your company as the owner, you're only getting 100. We are not going to include S corporations who pay owners and also pay them any type of distributions. We won't include the distributions because that is essentially return of capital that is not part of your payroll. And if you're using it as a part of your payroll, instead of paying yourself more to avoid the payroll taxes, here's an example of why you shouldn't do that. We're not going to include that. So if you only included 20,000 in payroll for yourself and you've been taking the other 100,000 out, which I don't allow you to do that if you're my client, then we're not going to give you the distributions on top of that. That is not a payroll cost that can be included in coming up with the loan numbers. The Treasury regulations that came out today backpedaled on including subcontractor labor. So originally it was thought that you were going, if you paid 1099 miscellaneous in commissions, if you paid 1099 miscellaneous, to your salespeople or to subcontracted individuals, that you would include these in here as part of your payroll costs. They said absolutely not. Those people can apply for their own payroll protection loan. You can't really double dip on that. And so, so just know if you are someone who receives, a 1099 for income, you could be applying for this as well if you're impacted by this situation that we're in. Okay, let me grab a couple more questions. All right, so Bob's asking, besides the employee's payroll monthly times 2.5, are we able to also ask for 25% additional on approved expenses? No, this is it. It is payroll costs is what you get to ask for on this particular loan. That's it. It is, these items. So there is, on this loan, there is not a place to calculate any additional. There may be some ability to do that on the disaster relief loans that are being handled by the SBA, but that's not going to come into play on this application. Okay, so Bob asked, are 1099s able to be part of payroll? And I just answered that one. Nope. As of this morning, the Treasury reg said, no way, no how. Life insurance is not health insurance. So you are not including any life insurance in here. This is health insurance costs only. So health, vision, dental is what we've determined that we will be including in our calculations. So will the employee be required to perform actual work, even if there's a slowdown in projects, and may only work 7 hours a day in order to be paid for 40 hours to use the PPP monies that are loaned to the company? So in order to get the forgiveness, you are looking to maintain your census, which means you're paying the same number of people at the same or similar levels to this time last year. It doesn't necessarily have to be the same exact person. It has to be the same number, the same payroll dollars have to be going out. So what they're trying to avoid is you laying that person off. If the question is, are they required to actually perform work? I would say if they want to get paid. But again, this is for calculating the amount of forgiveness of the loan, not to get the loan, but the forgiveness. So there's going to be some calculation there that says, okay, how much did you pay versus this time last year, and how many people did you have, and what were the pay rates? Did pay decrease by more than a certain percentage? They're saying for people over $100,000 in pay, that you cannot reduce their pay by more than 25% without it starting to disqualify you from some of this forgiveness. So yeah, it doesn't have anything to do with how you get the money. It has to do with how much is forgiven of the loan. And remember, it's a 2-year loan at 1%, and a big portion of it can be forgiven if you're using it for payroll costs, health insurance costs, and retirement costs, and state and local taxes. So I can't say for specific that the person has to be working, but I think from a business standpoint, you want the person to be working. So I know that's not a great answer, but that's about what I've got right now. So after you receive a loan, is it mandatory to request forgiveness of loan within 60 days of the receipt of the loan? 60 days is the window of when you can first begin to ask for forgiveness and start providing documentation. Is it mandatory? No, but I believe, it says expenses paid in the first 8 weeks. So 60 days is actually probably, that's 8 weeks. So I would say I wouldn't hesitate. I would definitely get on it and make sure that you are doing the work you need to get some of it forgiven. If you don't care if it's forgiven, then don't do it. But I would say there's going to be some regulations coming out on the timeliness of getting some of these things forgiven, because they're not going to want to wait and say in December you'd be like, oh, here's my information from for those 8 weeks. They're going to want you to be on the ball the banks are going to need to know how much is really left to be coming in, because that's going to be what eventually they're getting paid on. So as a follow-up to for Beth's question is about the person who, if they don't have 40 hours a week, you only pay them for time worked, unless they have paid time off or anything else that they can use, vacation just like normal. And they're an hourly employee, you're paying them for what they worked. Could they get unemployment for those other hours? That's possibly an unemployment website frequently asked questions question that we can go dig into. But the whole purpose of this loan is to keep people working. I realize that just because you keep these people working doesn't mean that your business still isn't going to slow down and you may not have work for everybody. But this is kind of how this is going to be employed right now. And so there's not a lot of answers. I would, from a business owner perspective, I would say, don't do things outside of what a normal business person would be doing in other circumstances just to try to comply with all the pieces of this loan. Don't make a bad business decision just because some of this might be forgiven. It's a low interest loan over 2 years. If you can't afford to pay that back in full, you might not want to apply for it. But I just don't want to see people, and this is the same advice a lot of you have heard me say, at the end of the tax year, when you're like, should I buy equipment? Only if you need it. Don't buy equipment just to get this tax break, because that equipment is not worth the same amount on December 31st. It's going to be worth more than it is on January 1st. I mean, it depreciates as soon as you put it in service. You couldn't get the same amount of money out of it. And so only if you need it, make a smart business decision. Do you need these assets? If you don't need these assets, don't buy them. In this case, if you have to lay somebody off because your work has declined and you cannot keep people, working, then that's what you have to do. You have to make the decision that's right for your business to keep it going. And that means, don't go cash poor for the hope that you maybe, have some forgiveness of this money, because it doesn't, for whatever reason, for me, that is just not common sense to me. So just, would you keep somebody around who only had 7 hours worth of work and still pay them, as if they had 8 hours? If that's your common practice, do it. If it's not, and you cannot afford to do it, then you're going to pay them for the 7. And the chips are going to fall where they may, because we have no guidance on what this is going to look like. So it's kind of don't count your chickens before they hatch. And as much as I would love to have every single answer on every single situation, I'm not going to have it, and I don't know that anybody's going to have it. But okay. Yes, so 75% of the loan needs to be used for payroll costs, and 25% of the qualified expenses, right, et cetera, for the 100% forgiveness. Yes, although for some people it's going to be really hard in 8 weeks to get to spending 100% of their loan on those things. Okay, so the question is, 75% of this loan needs to be spent on payroll costs in the first week, or no, first 8 weeks, excuse me, not first week, in the first 8 weeks. And so this is 2.5 times your payroll costs. So 2.5 times your payroll costs, that might be, that's 2 months of payroll. And then you have an extra half a month for everything else. You're basing this on averages, on the average monthly, and some of these expenses don't hit your books in an orderly fashion. They're not going to hit in these 8 weeks. You may not have the state unemployment. You may not have, so it's going to be a little tricky. I think it's going to be tough for anybody to get 100% relief. as far as this loan. I think, one, times are going to be tight, so you are probably not going to be spending as much on other things. So I mean, I think you just, yes, that is the calculation. At least 75% of what you've spent in the first 8 weeks needs to be on payroll costs in order to get the loan forgiven. Some people are going to hit this no problem. You know, I'm one of those industries that is the majority of my costs is labor. I pay my people. You know, kind of in the business of selling service, and I don't have a lot of overhead on the rest of it. So yeah, my payroll costs are going to be, you know, pretty high. And so it's going to use up the majority of this loan for me in the first 8 weeks. But it allows you to use the other revenue coming in for everything else. Tony is asking, will reimbursable wages paid under the FFCRA count against the forgiveness of the PPP? Not that I have heard, but what will is if you get the emergency disaster relief $10,000 or any other amounts on a loan from the emergency, I'm going to go to the next slide because that's where it's listed, the EIDL loans. So if you've applied for one and gotten one of these loans since I believe February 15th, that's going to offset either how much loan you're going to get to begin with or how much is forgiven. So those types of calculations, again, we are still waiting to hear on all of that, but I don't think the FFCRA is counting against that because totally different act, and that is pretty much supposed to be a kind of a wash for you on those. I don't think it has to do with the forgiveness. But I see what you're saying, because if you're forgiven on that, will it include those in the wages? Yet to be seen. Okay, so that's one I can follow up with and see if we get any more guidance. All right. All right, so, okay, we're gonna move on to this. I know we're already well over an hour, which I knew we would be. Sorry. There we go. The SBA disaster relief loan guidance. They're updating their website constantly. I found this on their website last night, which wasn't there last week or even earlier this week. We talked about the Paycheck Protection Program. The other pieces that are there, there's the EIDL loan. They list the EIDL loan advanced, which is the $10,000. What this loan is you go in and apply, and I've told everybody, go in and just do it. You know, they can either give you $10,000, you don't have to pay back, and you can go through the process of trying to apply for a low interest loan from the SBA that would take, I'm guessing it's going to take a longer, probably average of 4 to 8 weeks to actually get this loan. The Paycheck Protection Program is supposed to be faster, but again, it's not going to be today. It's going to be, I'm guessing it's still going to take at least a week to 2 weeks to get any money in. That's just a guess. Don't hold me to that. If you get it sooner, hallelujah. So the EIDL loan is, it is a lot. You're also have expenses you're allowed to pay. That is going to be used to pay more things operations wise. I believe it is not allowed to be used for capital improvements, anything of that nature. So just know that that application process is going to be longer. The $10,000 application, I have yet to see anybody that said $10,000 has hit their bank in 3 days, even though that's kind of what they were implying at the beginning of this week. That's going to also involve a longer application process. You know, you're probably looking at providing tax returns and financial reports. You will want to have 2020 books up to date for them, so because they're going to want to look at, you know, where you are through at least February. I can't imagine March. That would be a tough one to have ready for a bank right now, since it is only the 3rd. But the EIDL and the Paycheck Protection are working together in a fashion. And it has to do with either how much is going to be loaned. So if you've already gotten one, that is has to be included on the application for the Paycheck Protection Program. Having applied for it and checked the box that say, yeah, I want my 10 grand, that is not you having received it. So if you haven't received anything in your bank by today and you file today, you don't have to include that information. In addition, there's the SBA Express Bridge loans. If you've already had an SBA loan through the SBA before, this is a quick way to get an additional $25,000. So if you're currently in an SBA relationship or have in the past, reach out to your representative from the SBA that you've worked with in the past and see if you can get that $25,000 bridge loan. And then as far as debt relief, they are, the SBA is actually giving some relief for payments. So you can, if you have a loan with the SBA already, you can be able to defer some payments for a while, not the interest that's being accrued, but definitely some of the debt. So this, again, this is the website. You can go get more relief. If you have had SBA loans in the past, you know, I would recommend reaching out to your SBA representative and just getting some information from them. They may be on the front lines and have more than your banker who isn't working in the SBA world all the time. Okay, so what's next? So that's SBA. I know I breezed through that because I knew that the paycheck protection was going to take much longer. But what I wanted to move on to now is just a quick talk on focusing on the future a little bit. We are in such a state of uncertainty that it's sometimes really hard to look beyond this this week, this day, this hour. But what I think is going to become really important, and the people who are going to survive this and come out stronger, are ones that look ahead. I've said before, you know, don't cancel your third quarter plans right now. You know, if you were planning on doing this, or this, you need to keep on track with that as much as you possibly can. But as a company or as a business owner, you want to envision what it's going to look like when this is over. What do you want to think that where are you? You know, maybe your vision is we're still standing. You know, we are still open. We were able to open our doors and we have, you know, customers lining up on the sidewalk. And just start to put a vision to what you want to see, because it's going to be really easy to say, it's done, it's over, I got nothing, I'm going to lose my business over this. It's really easy. I mean, we're all business owners. We're all worried. We're all uncertain on what it's going to look like. But if you don't get into a situation where you have a mindset that says, we're going to get through it, we're going to be stronger, we're going to be better. So I would suggest, you know, get with someone, whether it's a friend, a coworker, a team member, a partner, and brainstorm some revenue generating ideas. And what I always tell my clients to start with is, what do you know? You know, what could you teach somebody else? What is your expertise? And maybe it's related to your business and maybe it's not, but if you are in a position where you need to make some money in the next 3 months because you've been hit pretty hard, what revenue generating ideas can you have? And around that and around other areas, start setting some second quarter goals. We're in second quarter. We've got 3 months. What do you, at the end of these 3 months, what do you want to have achieved? Some may be revenue goals, and maybe those revenue goals are saying, okay, well, I was making, you know, $20,000 a month. I want to get out of this quarter having averaged $10,000 a month. Because if you do that, then you know you kept the lights on. Maybe that's all you got to do, but you kept the lights on. So, and a part of this focus is I want to tell you, what if you don't get the payroll loan? What if you don't get the $10,000? You can't just sit back and wait for a bank to kind of fund that. I want that, you want that, but what if it doesn't happen? What if something else changes and they say, we moved too fast and we need to put the brakes on this lending until we iron out these details. If that happens, you need to have some plans. And so that's why I think you should work on some vision, work on some planning. One of the things that you might see that you have time to work on now that you didn't before is, some of your internal systems, your marketing, your website, your e-commerce site, your list building to, market to your customers, maybe a product you were thinking about doing. Is there anything that you were doing before that you were doing in a brick and mortar, or you were doing face-to-face that you could move online? A product you can sell. Could you change your consulting to remote, use a Zoom call? Could you teach a class, host a webinar, charge for it? Things that you could put together and say, okay, I'm going to launch this in April and we're going to see where it goes. Because I just don't want everybody to sit back and one, wait for the bank, two, to dwell on the gloom and doom that we hear every day. This is not an easy season for anybody. I definitely get that. So you have to look beyond where you are. This might be your opportunity to say, hey, we always wanted to do this. Let's put some effort into that. Let's put some thought into that. Let's put some planning into it, even if we can't launch it because we don't have the funds to launch it. We can say, yeah, we're going to move on this before the end of the year. But definitely start thinking about what do you want to accomplish this quarter? Because just sitting back and filling out loan applications and wondering what's going to happen and listening to the news isn't really going to accomplish anything. You could be spending your time, like I said, learning something new that you could teach other people, learning something new that can help your business in the future, any of those things. So please just know that I'll be happy to brainstorm ideas with you for any of your situations. I don't know it all, but sometimes if you don't have somebody to bounce something off of, you might think it's a good idea, you might think it's a terrible idea, and you talk to them and like, oh, that's great. Let's brainstorm how we would do that. So no, I'm here for that. And then the last thing is really the most important thing to get out of this is to stay healthy. So stay healthy, stay positive. It's not easy, holy cow, not easy to stay positive, but you have to, especially if you have a team of people, they need to know that you're doing everything you can to keep them employed, that they're going to have a job when this is over, and that you're taking advantage of everything that is being offered that is a good business decision for you. So don't think that every single thing that comes out, some things you're mandated to do, some things you're not. So know that you need to pick and choose and do what's right for your business. I'm going to look through questions one more time. Okay, all right. I think that is it. If there's anything I didn't get to, like I said, Zoom is wonderful for being able to send me all this stuff after the webinar. So this is the slide that will be included with your follow-up email that will come out probably tomorrow. It takes a little bit to get the recording downloaded and available. But the irs.gov, and I'm going to tell you again, I think I told you last week, use reliable resources. News outlets are not reliable resources. Go to the source. So irs.gov, departmentoflabor.gov, which is DOL, labor.mo.gov for all your unemployment questions. There's Department of Revenue, that's for Missouri. There's the SBA page. There's a couple of pages on that. There's also home.treasury.gov, and this particular site right here has it has the PPP application, the most recent one, today's legislation that has a lot of questions and answers in it. And then I will just say here, ways to stay connected with us. Like us on Facebook. I don't think I got to go live on Facebook today, but I will get this. I do post in there, and especially when I'm hearing updates that are coming in overnight, or I notice something. The other place is to join the WLX co-mailing list. That is my education arm of my business, where I plan on building up future training, future classes things that are post-COVID-19 that I was working on that I would love to be able to get back to in giving some training on bookkeeping, QuickBooks, knowing your numbers, and various business related topics, relating to goal setting or, finding, brainstorming sessions, whatever. So there's the link for wlxco.com, and you can click on the button that says essentially sign me up, and that will get you onto my email list for that. So you'll be in the know for any classes that are coming that maybe don't have to do with COVID-19 legislation. And then the last place to stay connected with us is our website. That is where you can book virtual appointments with us. You can upload or download documents through our secure portal, and then there's always a monthly newsletter available. We probably won't get it done this quarter now, but we were working on doing a website relaunch this year, and so we're probably going to post-date that a little bit to maybe third quarter, where we'll roll out a brand new website, and we'll be able to post and have some of these videos up there so people can have super easy access. So again, I appreciate you all. If you have any questions outside of the questions that you were able to put into the Q&A, please feel free to reach out. Know that we are just actively trying to get all this stuff done. If after this webinar you decided you can do this application yourself and you do not need assistance from us, please let us know, because we are we're going to work on this for every single business, knowing that they're probably going to want it or need it or consider it in the next week. And so we will not be able to get applications for all of our clients done today, probably not even over this weekend. But we will be working on it, and then also reach out to your banker and find out what their process is and if they're even doing it or if they're putting it on hold if you haven't already, because it must go through your bank. And I would suggest starting with your bank, because if your bank's not doing it, it might be tough to find one that is. So anyway, have a great rest of the Friday and a great weekend. Enjoy the warm weather here in St. Louis, and I'll talk to you soon.